And hello traders, and welcome to another video. So in this video we are going to talk about scaling in. Okay, so the really one of the most important things, guys, that you need to learn is how to scale in into the positions. Okay, because remember, the average retail trader, when he's trading, when he's winning, he's fearful, and when he's losing, he's hopeful. That means that when he's winning, he's scared, he wants to close his trade early, and usually when people win, they do not win enough. They do not win big. And when they lose, they hope that trade is gonna magically reverse. Maybe they play with their stop loss, because they're hoping it's gonna reverse, and they lose big. In hybrid, we do things completely differently. Okay, so when we win, we want to win big. Okay, so this is why we have our trade management system in place, so we can take advantage, over the trend and over our trades. So when we are winning, our winners are really, big, and our losses are always capped at -1%, or sometimes we even reduce those losses, for 0.5, 0.2, etc., etc. But yeah, guys, the point is, when you win, you want to win big, and this is where you want to take advantage when you're right. And this is why the scaling in into the position is a must in our strategy. Okay, so in this video I am going to show you how correctly to scale in the position, what are the rules in order to scale in the positions, and yeah, I'm gonna explain how scaling in basically works. So I have taken this trade that I already showed you guys on. I think I have recorded a video about reversal trades, but I think this is the best example because we had a lot of scaling in positions in this bit of price action. So I took this example because we are gonna have a lot of things to break down, a lot of scalings to go through. I think it's gonna be really the most helpful example out there. So yeah, let's start with the video. So as you can see, we have this impulse to the upside. Price has left this imbalance right here. So at this point on, price is going in this ascending price action. So we know that this is AJ. So usual thing that AJ likes to do is move in this impulse to the upside and then make this standing and then continue to the upside. So at this point, we do not really know if this indicates weakness, and we're gonna have a reversal trade to fill this imbalance and trade this as a reversal trade and our high probability news pattern, or price is gonna just continue up and we're gonna have our continuation trade that is also high probability on AJ. So we do not do anything at this point. We're just trading the price action, waiting to see what happens, what price action wants to do next. So as you guys can see, price was pushing up and then came back pretty strongly to this order block. So this order block was considered really, really aggressive, coming back in this volatility. And we saw this right now that price has made this change of character. So price broke this, took out this low, and let's see what happens after we take this low. So at this first candle, we were basically breaking the low with one candle. We have left the wick, so we didn't have enough confidence that reversal is valid up until this point. Okay, price right now has confirmed to us that has broken this low. It also took out, as you guys can see, this low right here. We do not have volatility because with only this candle we saw this volatility, but right now we do not have volatility. Basically, this is considered volatility when you have volatility like this. But when price made this and continued to downside, this is not volatility anymore. Okay, so we could mark our order block right here and see what price action wants to do next. So also reversal trades in this bit of price action on AJ are a little bit more aggressive to take, and at this point on, price was not showing us really that we want to get involved here. Why? Because we have left a wick at this low, but again, wicks on AJ, these kind of wicks do not play a big role, so we do not consider this as a big wick on AJ. And price give us this momentum to continue to the upside. So at this point, we were looking at this point of interest and we were not that interested in taking trades. Why? Because we know this is AJ. AJ likes to give us a lot of fake outs. Wick plus aggressive retest is never a good idea. So what we want to see is wick being respected and price ranging first before giving us an entry here. So if price immediately give us an entry on volatility, this would be considered a risky trade and we would not take it. But as you guys can see, we didn't touch that. We start to retrace, start to range. Price was giving us this range. So this was really building a lot more confidence in this trade right now. As you guys can see, we were making also liquidity. So we were having this liquidity also as an extra confidence before entry. And again, as you guys can see, price give us entry right here. It was a nice 11 pip or around 11 pip stop loss. And we are looking right now what is going to happen. Okay, so again, price was giving us a really nice execution here. You know, at this point, price was coming back aggressively at this order block. We would not be interested, but because price respected this wick, made a little bit of inducement here, it was still high probability to take this trade. So right now, basically, we are not doing anything before we break this low. So again, guys, you know, we're looking at the trade management. We do not do anything, we do not touch anything, we do not set our trade on break even, we do not nothing before we see the price breaking this low. Okay, so let's see what happens. Right with next candle, price broke the low. So after the price have broken the low, where was our high? So we're looking at where it was high, our high was here. So we're always managing our position 2 pips. Okay, so 2 pips above this high. Okay, so this is where our stop loss is going to be, and you're gonna see that immediately after we took this high, we are after we took this low, we are immediately reducing our risk. So at this point, our stop loss was here at full 1%, and right now it is only like 0.2 or something. So again, this is an example how fast we are reducing our risk. And right now, even if, because price was breaking this low with the wick and immediately rejecting the lows, what is that telling us? Price doesn't have momentum to continue to downside. And this is why we are immediately reducing, but we do not do nothing. We do not make that decision for ourselves. The market does that for us. So everything is robotized, everything is systematic. We do not do anything. We just manage our position based on what price action is telling us. Price action is telling us that it's breaking these lows and retracing immediately. Our high is here, 2 pips above a high, fixed rules in place. That's it. We just follow the rules. So immediately reducing the risk. Okay, first thing, let's see what happened. Price is trying to fill that wick, made a retrace. So right now, after we saw that we are breaking the lows and retracing, as you guys can see, this was a retrace candle. Right now, if we broke the low, we are again going to manage the position. So we have broken the low. Right now, our low is, new low is here, not anymore here. Our new low is here. And we're looking at where is our high. Our high is right here. So again, we are managing our position 2 pips above this high. I'm not going to calculate right now everything exact, you know, in numbers, but again, always 2 pips above the most recent high. Okay, so we're looking what price action wants to do next, and we are going to see that we have a scaling position right now. Okay, so this inside bar is basically a new demand created right now, and if we set our here, we're gonna see that we have our new order block here. So guys, right now I want you to understand this. When we are scaling into the position, we are focusing on the math behind it. Okay, so we can all agree that this as impulse, retrace impulse, is not good to trade as a continuation trade. Okay, we all know that, but we actually do not care. Okay, so let me explain. If this was our initial entry, let's say for example we miss this trade and we want to get involved here, this would be a big no-no. It's a big no-no. We do not want to do that because, you know, trade is risky. We are risking a lot. We are risking -1% if we lose the trade. But guys, because this is a scaling position and because our first trade is already locked at 1.4%, this is basically a risk-free position. So worst case scenario that can happen here is that we are going to lose 1%. So worst case scenario, we are gonna lose 1%. Let's say price pulls back and takes us out. Worst case scenario in this trade, we are gonna be at -1%, and in this trade we are gonna be up plus 1.4%. So our total will still be plus 0.4%. So worst case scenario, the worst thing that can happen, we can still earn money. We're still gonna be positive in this trade. We're gonna still extract some value out of this trade. That's the worst case scenario. And the best thing scenario, and this is why, you know, power scaling is so powerful. This method is, you know, crazy, because if we win, we are gonna win double with every pip the price goes to the downside. So we're not gonna make only money with the first position, we're also gonna make money with the second one. And this is why is this so powerful. Okay, there are a few rules though when you want to scaling in the position. So first rule, and really most important rule out there, is that you do not scale into the position if you have open risk still on the first trade. So if you have 0.1% risk on the first trade, you do not take the scale in. Okay, but if the first trade is on break even or above, you are scaling in the position. Okay, you can scale in the position. So only then. Okay, the second rule is that if position is on break even, okay, break even, only break even, not in plus, not in minus, break even, and you have second scale, first scaling aggressive one, you do not need to take it. Okay, why? Because if this trade is on break even right now, if you take this aggressive trade, worst case scenario would be you take -1% here and you take break even here, and your overall profits are going to be -1%. So this is why if your first trade is on break even, you do not need to trade this scaling aggressively. Okay, so only when the first trade is above 1%, so above 1% locked in profit, then no matter what the price action, you're entering the scale in. Why? Because you're not looking at the price action. You don't really care about the price action. You care on a little bit of math. You understand? So math is important here when you're looking at the scaling. Worst case scenario, if you're 1% plus, and here you're risking -1%, worst case scenario that can happen is that you finish the trade on break even. But the best case scenario is that if price starts to go down, you're making double your money. Not you don't have one trade, you have two trades, so you have double. With every pip you're making double. And this is the power of scaling. Okay guys, this is why the scaling is a must skill you need to learn and to have implemented in your trading. Because again, when you win, you want to win big. Okay, and when you lose, you want to lose small. So let's see what happened. Again, price action is pushing lower, so even better confluence for us. you know, that this scaling is going to be good. Price came back a little bit more aggressively, forming that volatility, but we do not really care because we have locked our profits in 1.4%. So this is basically our risk-free position. So let's see what happened. So we're doing nothing. Our high is here, our low is here. So we're waiting to break the low. When we break the low, this is where we manage our positions. So this is our new low right now. Where is our high? We are looking at where it was a high, so low, both. This was our high. So right now, this position will be locked at 2 pips above this high. It would be 1.9% almost. And this would be like almost 0.6% minus. So we would reduce our risk on the scaling position, and it would not be 1%, full 1%. It would be 0.6% or something like that. Let's see what happens next. So we have left the week as expected. We saw the retrace. So right now, if we break the low, it's going to be even better because we're going to manage our position. And this is what happened. So again, we are breaking this low right now and we are managing our trades. So this was our most recent low. Let's see where was our most recent high. This was the INSI bar candle. So we're managing our high here. So right now we're seeing that at the scaling position, we are at plus 2.7% almost, and first position we are locked at 6% almost. So basically, if you had only one trade, you would be earning only 6% here. But right now, because you have scale in position, you have plus almost 3% on top of that 6%. So crazy, right? So this is why scaling is a must, you know, when you're trading. Okay, so let's see what happened. Again, guys, another scaling position. So you're gonna see. So we are checking first if we are on both positions or both positions we're in plus, locked in plus. So here we have locked our profits almost 2%, almost 6%. So we can scale in position. So we can again scale in the position. Again, it is aggressive. It is aggressive. This is like we barely broke the low. We barely broke the low. This is indication of weakness. We would never enter this kind of setup. But why wouldn't we enter it now? Because we have 6% and almost 8% locked in profits. Again, guys, what is the worst case scenario that can happen? We can lose here minus 1%, but we can gain here plus 8%. So our total profits is going to be still up plus 7%. You do not have anything to lose. This is worst case scenario that can happen, is you're still going to win money. Do you understand? And what is the best case scenario? Right now, you're going to have 3 trades that are going to win you money. So you're not going to have, double every pip. You're going to have triple every pip. So again, guys, this is why when we are in profit, locked in profit, and when there is a scaling position, we do not focus on price action. We do not care about price action. We focus on the math behind the scaling. Okay, so let's see what happened. Price again breaking the lows, and right now you see how powerful this is. So again, this was our low. Where was our high? We're looking at where was high. Here's our high. Managing first position at almost 6.7%, 6.8%. Second position almost locked in 2.3%, and this third scaling position is locked at minus 0.5%. So you have reduced your risk. Let's see what happens next. So we have saw that price is rejecting the lows, again leaving a week behind, and right now we are seeing the retrace. So again, we are not doing anything. We are patiently waiting for the price to break the low again, and this is what happened. So again, right now, guys, we are managing our position. This was our low. We're looking at where was our high. Our high was here. Right now, we are managing our position 2 pips above. So you have almost 3% here right now. On the second scaling position, you have almost 7%. And on first initial entry, you have almost 12%. So do you see how powerful and how quickly this can scale up? So if you have managed and you have only taken one trade, you would earn just 11%. But right now, because you took advantage of the scaling position, you have two more trades that are locked in profits. One is locked in 7% and one is locked in 9%. This is 10% gain, 10% gain. So almost double than your initial entry. Do you understand how powerful this is? So again, what can we do here right now? We can scale in. Why not? We would be fools if we do not do that. Yes, the trade is aggressive. Yes, price is indicating weakness, but we do not care. We have 20% locked in profits. What is 1% if we lose it here? Basically nothing. We are still in advantage. We are still in plus. And this is why we are taking this trade for scaling here. All of the trades are locked in profit. So our rule is respected. We can take the scaling trade. Boom. Give us an entry, immediately broke the low again. So right now we are managing our position again. This fourth right now scaling is a little bit in minus, so still we have a little bit of risk on the table. So let's say 0.1%, and these three are, again, we're locking profits on those three entries, and we're looking what happens next. Massive impulse, again, price breaking the lows, leaving this a big wick behind. So right now, again, guys, we are not doing anything. We are waiting for price to break the low. And price broke the low here. So let's see where was a high. Our new low is here right now. Our new high is here. So again, we are managing our position. So right now, the fourth scaling position is working for 5%. The third position is, I don't know how many profits is this. It's really, really big profits. So our first trade is going for almost 20%. Second trade for almost 15%. Third trade for almost 10%. And fourth trade for almost 6%. And what do you see right now? Scaling. You can scale in the position. So again, guys, you know, when you have opportunity to scale in a position, do not get scared. So you do not want to have a typical retail mindset to be scared of profits. No, you want to do things completely differently. When you win, you want to take advantage of that and win big. Okay? Because you do not know when you're going to open your next trade and win money. Extract as much as possible from the trade. Okay? Let's see what happened. And another scaling position. This is terrible. This is terrible. This is indicating volatility. We didn't get a quite nice breakout, but again, it was a breakout. And again, volatility. Price coming back, volatility. You would never enter here on your original entry. But you have, how much money you have locked? What is minus 1%? Nothing. Okay, nothing compared to what you have locked all of these profits. So 1% is nothing. This is why, of course, you are scaling in the position. And again, we're breaking the lows. So right now, again, where is our low? Here is our low. Where is our high? Our high is here because we had this NC bar candle, retrace candle. So this right now position would be locked at 3%, and we're just gonna manage all of this. I'm not gonna calculate it every single time. We're just gonna look at the end. So again, guys, we have locked in profits here. So again, we can scale in a position on this NC bar right here. Again, when you're using NC bar, you're not considering this wick right here. So you're only executing on NC bar. That's the rule of the NC bar. Let's see what happened. And again, we got tagged in position. And again, guys, we're breaking the lows. Okay, so again, we're breaking the lows. This was our low and this was our high. So this would be a break-even, almost break-even trade, but not exactly. It's still a little bit in minus, and we are gonna just lock all of this. Just manage all of this right here. And let's see what happened. We are not fully, because remember, you're always setting 2 pips above. So you see that you're not fully risk reduced in this position. So this is why you don't take a scaling position, because you have still risk on the table on this last scaling. So if we right now break the low again, and if we manage this position or break even on above, then we can look for scaling. So always, that's a fixed rule. If you have open risk on the table, you do not take the scaling, okay? And price has broken this low, and right now we see our low is here, our new high is here. So this position right now is on break even. And right now we can scale in a position. So let me manage everything. Again, guys, 2 pips above. I'm not setting 2 pips above right now, but always the fixed rule is 2 pips above the most recent high. So again, there is a position here that we can scale in, because remember, this right now scaling is also a locked in profit. So we have reduced the risk out of it, so we can take a scale in. And price tagged us in and took us out. So this would be a minus 1%, and all of this would be profit. This would be break even almost, 0.2 nothing. This would be 6%, 9%, 12%, 18%, and 24%. A massive, massive, massive trade, and really showing you how you can take advantage over the trend, over the market, when the market is trending, when there is a momentum involved in the market, and you were just basically taking free money, taking scaling opportunities, because you want to win big when you're right, and when you're wrong, you want to reduce your risk and lose small. So this is scaling method, guys. This is how we are scaling in the position. I hope that everything is clean and clear for you. Again, guys, if you have any questions or you do not understand something, just DM me privately on Discord. I'm going to be more than happy to explain. This is all for this video. See you in the next one.